Welcome back to Financial Clarity for Doctors, everyone. This is Rachelle Vanderzanden here with Corey Janoff.
Hello.
Hello. And today we're going to talk about exciting stuff and how election years affect investing or how they could potentially affect the stock market and the economy and things like that. If you've been watching the news at all, you've seen some drama. Most people at least catch some headlines, even if they're not watching terribly closely. But that is because 2024 is a presidential election year, which also always makes the news cycle a little bit spicier. But it's been particularly interesting this year with President Biden stepping down and endorsing Vice President Kamala Harris as his running mate or as the new presidential candidate for the Democratic Party. And it's been a little wild, which every time we see things like that, we're like, this is unprecedented. And it's like one of those words that people bandy about maybe too frequently. We did record one other great episode in 2020 with Cole Kimball, who's a colleague of ours here, talking about presidential politics in the stock market. If you haven't listened to that one, I would go back and listen to that too, because I think it just has some great insights. And Cole is so intelligent, and it's kind of fun to listen to his thoughts on that too. But today, you get to listen to Corey and Rochelle's opinions and insights on election years and the stock market. So it'll be super fun. Buckle in.
Yeah, I think honestly, the one we did 4 years ago with Cole just changed the names of the candidates, and it
Yeah,
holds true today.
it's very relevant. Absolutely. Yeah. So I think we can talk a little bit about how this year is a tiny bit different. We use that word unprecedented a tiny bit, but on July 21st, Biden withdrew from the race. He endorsed Kamala Harris. The next trading day was the next day on July 22nd. And the S&P 500 opened at like 5,544 and closed at 5,564, like 20 points, barely a blip. So I think you can tell that the stock market doesn't necessarily care that much about what's going on in a presidential election. And for many people, elections seem like a very big deal, and they can be. And I think it's important to sort of separate out like political implications in general from like how does presidential politics affect the economy? How does it affect the stock market? Because those are two different things. You know, obviously, we can have very strong opinions about who should be in office and who we want making decisions on like social situations and foreign policy and even on economic questions. But in general, I think that the presidency affects the stock market and affects the economy slightly less than we expect and less than we think that they do. So we're going to talk a little bit about that today.
For sure. And as we're going through this, try as hard as you can to separate your political beliefs from your investment thesis or theses. Or we got to separate church and state here because they aren't necessarily correlated. Remember, the stock market is made up of investors all across America and the world, and half of us have opinions that differ from the other half. So we all come together and buy and sell and trade the investments, and that's where you get those aggregate prices. So
Yep.
stock market is a forward-looking tool. It tries to predict the future. That being said, it's not very great at predicting the future because the stock market is comprised of investors in the stock market, and those investors are humans, and us humans have emotions. And I love a saying about, I forget who said it about physics. Was it Isaac Newton, maybe? I don't know, but imagine how hard physics would be if electrons had feelings. So there's certain laws in life that hold true, like gravity. Doesn't matter what your belief is. You know, if you're a flat earther or not, gravity exists. Whether you want to fight it, it's there. And but with our investments, it's, we take data today and then tell ourselves a story about tomorrow. And people can have different stories and different versions of those stories. So that's why you see ups and downs in the stock market. If we were good at predicting the future, you wouldn't see bubbles and busts. It would be basically an escalator ride, maybe with some slight changes as the wind blows, but overall pretty uneventful. The thing the stock market doesn't like is surprises. So that's what really moves the needle, is when there's a surprise, either good or bad. With this election season, it's unlikely to be many surprises. I mean, regardless of who wins, you look at the polls, it's a pretty dead even race. I don't think anyone would be overly surprised if either candidate wins the presidency, and then same with the House and the Senate. Like, I don't think anyone would be overly surprised if it ends up, majority Democrat or Republican. Contrary to 2016, when, let's be honest, no one really expected Trump to win. And when the final tally came in that evening, and it was clear that he was going to win, it shook the futures market. Like, there was a temporary crash, but it eventually recovered by morning. So yeah, things, the markets, they don't like surprises. So um if we're the market's actively trying to think about how the presidential election, congressional elections could potentially affect things like taxes, interest rates, housing costs, etc., foreign policy, you name it. And with all these things in mind, they try and predict, all right, if so and so, if this or this happens, how's that going to impact things? And again, we have the collective minds on both sides of the aisle participating. So, I don't think you're going to see a ton of craziness after November, whatever, 4th, 6th. What's the date this year? Do we even know? First Tuesday in November.
Oh gosh. Yeah, that.
I haven't looked at the calendar, but
We live in Oregon. We just get to put it in the mail ahead of time.
yeah, right. Yeah, we get our ballots, put them in the mail.
Yeah.
Or drop it in the box if you're last minute. So,
Mhm.
but in reality, the president has, like Rachelle mentioned, a lot less influence over the economy and the stock market than a lot of people would like to believe. Like, in reality, in order for things to change, Congress needs to pass laws. And Congress doesn't really agree on anything, so it's tough for Congress to pass changes to laws. So, regardless of what the presidential candidates' proposed plans are, it's unlikely that those plans will ever come to fruition in full, because Congress has to fight over it. Whatever gets passed, if anything, is going to be a more muted, tame version of whatever is proposed, because there's going to be haggling and concessions made, and it's going to be some sort of, lesser version of whatever is initially proposed. But yeah, and keep in mind, like, we all, I like to think, kind of want the same thing from a 30,000-foot view, like economically speaking. And that's what we're covering today, stock market and economics. We're not going to talk about other social issues or anything like that potentially is impacted. But I'd like to think that regardless of who the candidate is, if they could wave a magic wand and give everyone jobs, give everyone pay raises, make housing prices go down, inflation, or I guess you don't necessarily want housing prices to go down if you own a house, but for homeowners, make their housing prices go up. For home buyers, make housing prices go down, make inflation go away, and make the stock market only go up. They would do that. Unfortunately, no single person has that much power. And, we all want the same thing. We just have different ideas on how to ultimately get there.
Yep. And if the stock market wanted to try to do like invest ahead of time to prepare for this next president coming into office and the potential policies that they might place to like help boost their portfolio, you'd have to guess who's going to win the presidential election, who's going to be in Congress and in the House of Representatives and in the Senate, and what policies they're going to be able to enact. And no one can predict all that. Like, we just can't. Like,
And
we
then
can't.
how those policies are going to impact your specific.
Yeah, yes. And what is the effect of those policies, which is usually not what we expect it to be. So it's really interesting. So most of the time, we're not doing a whole lot to try to proactively invest ahead of time based on who we think is going to be in office, because it's way too hard to do. When we're thinking about politics in general, like if you participate in a debate team in high school or college, you're given a topic to argue for or against. You don't even know what side of the argument you'll be assigned on until the morning of the debate. And you have to prep for both sides. So regardless of the issue, there are arguments to be made for and against everything. And whatever your personal opinion is on the matter, understand that probably half of the population disagrees with you and can make supporting arguments in opposition. You may think that they're not great arguments, but they're there. Like, people have reasons that they make the decisions that they do. Lots of times it's like value based, and we can't really argue with values. Like, they are what they are, and we're not going to change a lot of people's minds about those kinds of things. But obviously, there's some people that are in the in between there, because we see people that are swing voters, which is so hard to like imagine sometimes, like being someone without a strong opinion, but it happens.
Well,
Um,
people with the
Lori
strong
likes
opinions,
arguing.
I do. People with the strong opinions get the most attention, but I think
Yeah,
most of the population is probably more in the middle. And I mean, well,
I think you're right about. Well,
I don't think everyone's extreme. I think there's a
no, I don't
few
think everyone's extreme either.
nutcases on either side, but I think most people have a more modest take. There's probably some issues that they lean left on and some issues that they lean right on. You know, I find it, I could be very wrong. And I'm not, I will be the first to admit, I am not the most knowledgeable person when it comes to politics. I don't find it interesting. Yeah, I'd rather do other things like that are more enjoyable for me and my life and my family, like go outside and play sports and do things with my kids and whatever. But you know, I think you know most people have you know a more tame version of what our reality TV appears. You know, what the news networks have basically turned into. These hot take shows, but I think it's fun to argue in certain circumstances. I mean, and it's fun to play devil's advocate. Like, even if I agree with the person and what their opinion on a matter is, you know, it's fun just to, you know, take the opposite side just to poke the bear a little bit. And I do it in my own head as well. And it helps me understand concepts and rationalize things and you know, all right, you know, why is this thing the way it is, or what's good if this thing happens, what's bad if this thing happens. You know, it's a good way to analyze your investments as well. All right. You know, do what's the from college and high school, the SWOT analysis, strengths, weaknesses, opportunities, threats. All right. What, you know, could benefit what are the benefits of this? What are the risks of this? Opportunities, threats. Um, you know, why might this be a good thing? Why might it be a bad thing? And you can kind of go back and forth in your own head and with other people, you know, respectfully. And you know, some people just, you know, think if you're arguing with them that you must hate each other. No, not at all. Like, you know, have conversations with friends and, you know, respectfully disagree on things and just have fun about it. You know, we do it all the time with sports debates and arguments, and, you know, we can still hang
Mhm.
out and have beers together. But for some reason, when people start talking politics, it gets spicy and people like hate each other and won't talk to their neighbor anymore because their neighbor put up a yard sign. It's like, come on, people, we're all humans. You know, if you spend enough time with any individual, you'll, you know, probably find common ground on, you know, things that you guys mutually agree on and enjoy together and find a way to be friends. So I don't know.
Mhm.
That's just me.
I think people
But
are still capable of doing that. You still see it happen sometimes.
But yeah, I know like kind of, you know, personal conversations. Like I'll have the nice thing about our job, we get to talk to people every day. And, you know, it's mostly about their personal finances and investments, but you definitely have people open up with their opinions on a whole array of matters, you know, especially politics. And we get people who will go on rants on both sides of the aisle, you know, about why they think so and so is great or terrible for for the economy or America. And you know, like I remember back in 27 summer of 2017, I was talking with a gentleman, not a client, but yeah, he's a very conservative person from a very conservative part of a very conservative state. And he knows I'm in finance, and we were talking about, you know, the stock market or whatever. And he's like, you know, when Trump got elected, it was like a weight was just lifted off of the stock market, and all this money came rushing in, and it buoyed the stock market. And that's why things are doing so well this year. And we've seen such positive growth. I'm like, all right, yeah, that's, you know, one opinion, but you know, I didn't bother bringing up the fact that the stock market also did pretty well during the Obama years, and you know, literally every presidency before that for the most part. But you know, neither here nor there. It's you know, like what's the point of arguing in that type of scenario? You know that what that person's opinion is. But you know, we get it on, like I said earlier, we take data and information, tell ourselves a story about it to make it make sense in our own heads, and then we tell ourselves a story about what that will likely mean in the future. What are the future returns going to be based on today's information? But you know, you have personal conversations with people, and you know, it's always like negative and concern that's brought up. It's never it's either going to be neutral or good. It's always either neutral or bad. Like if, so and so is elected, it's going to be terrible for America or the economy. It's never if so and so is elected, it's going to be great for us. But if the other person's elected, it'll be just okay. It's either just okay or terrible. Like,
I think that the pessimism definitely stands out to me too. I feel like in our little bubble, we talk about, or like we talk to a lot of people who are like, this is just all terrible. It's just like bad or worse, And I'm just like, oh, okay, can we just, I get it, but also let's have a little hope about people and life. But
like as
I
long
think,
as we're still alive and here, like
yeah,
I think there's some optimism to be had, right? Like
totally.
at least from
Yep.
an economic perspective, I'd like to think.
Exactly. Okay. And well, that's the thing. It's like maybe they're not focusing on economics. We think about money every day. This is like where our head is a lot of the time. And we're like, it's paid, but other people are thinking about things that are more doom and gloom from like a bigger perspective that is different. But we're going to bring it back to what we know, which is money to a certain extent. But just some facts for you about US stock market returns during past presidencies. And we're going to go like most recent to oldest, and we're not going to go through every single one because that would be ridiculous, but just a little sampling of recent stock market performance. So while President Biden has been the president, the stock market has been positive 3 out of 4 years. While Trump was president, it was 3 out of 4 years. While Obama was president, it was positive 6 out of 8 years. 2011 year was pretty flat, and then 2015 was down 1%. While President Bush was president, it was positive 5 out of 8 years. Kind of had a rough start coming in during the dot-com bubble and then ending with 2008, which was obviously not a positive year. Clinton, while he was in office, it was positive 6 out of 8 years. Bush Sr. was positive 3 out of 4 years. Reagan was positive 7 out of 8 years. Carter was positive 3 out of 4 years. And we could keep going. But almost every president kind of falls in line with the average historical data of the stock market, which is being positive about 75% of the time. And there will always be some variations. There's never like this statistics hold true for every single person all the time. But it's not statistically significant whether that president was a Democrat or a Republican. Like it is what it is. Like those economic cycles are much more important than who is president. And they may have some influence over those economic cycles, but not nearly as much as we like to give them credit for.
I just added a line there at the bottom too. One of my favorite quotes, and I'm
Mm-hmm.
sure I could Google to find who it is, but we talked about how Congress probably has more sway than the president, but Congress has been a dysfunctional swamp of disappointment since 1776, yet US stocks have been great ever since then. And I mean, easy to say right now when we're sitting at an all-time high in the stock market, but like every 4 years, we're practically sitting at an all-time high. So it's
Yeah.
we hit all-time highs more often than not because the stock market generally, again, 3 out of 4 years ends the year positive, which means 3 out of 4 years, it's probably setting new highs.
Yep.
Um, and we got
And
to
guess what? Presidential cycles are 4 years. So
but we got to remind ourselves again, separating church and state here, removing our political beliefs from the economic opinions and stock market analysis. What are what is the stock market comprised of? It's the greatest, most successful companies in the country and the world, if we're going international here. And, some of them will eventually fail, and, regardless of who's president, they'll eventually, go under, get merged, bought out, whatever. Not every company lasts centuries. Most companies only last about a generation. But in their time, they're the publicly traded companies, which is the stock market, the ones you can invest in, are the biggest, strongest, most badass companies out there. Regardless of what you think about that company, like they've done well at printing money for themselves and their shareholders. That's why they're where they are, and you can invest in them. And it doesn't matter who is in office, doesn't matter what the congressional makeup is. People from both sides of the aisle are still eating at McDonald's, watching Netflix, shopping on Amazon, drinking Coke and Pepsi products, buying iPhones, talking on Verizon and AT&T's airwaves, et cetera, et cetera, et cetera. So, as long as there's people, we're going to need goods and services. We're going to be buying things, and therefore there's opportunities for companies to deliver goods and services to the population, and opportunities for investors in those companies to participate in the shares and the revenue growth that those companies receive. So keep that in mind. Like, these companies, sure, maybe their leadership might prefer one candidate over the other based on certain policy proposals. But at the end of the day, these companies are good at making money. Like, all the companies I rattled off have endured through all sorts of administrations. The reason they're as big and strong as they are is they find ways to take advantage of the laws that are implemented and find ways to make money regardless. Is it moving operations overseas? Is it bringing them back domestically? Is it taking, advantage of new accounting metrics? Is it, finding opportunities to get tax cuts and break, like they'll find ways to make money. I promise you, companies will find ways to make money. Opportunities arise with every single law change. Other doors get closed with certain ones, companies adapt, pivot, etc. And, that's, investors will benefit in the long run, in my opinion.
Yep. There are a handful of big political issues that can potentially affect the stock market. Again, like some of this just kind of ebbs and flows with every administration. But I think some of the big ones are interest rates, which is actually supposed to be nonpartisan and non-political. So the Federal Reserve controls the overnight lending rate between banks, which affects mortgage rates and auto loans and all of those kinds of things. The Federal Reserve is not a political entity. It is not like democratically elected. It's not affiliated with Republicans or Democrats. And the president and Congress are not supposed to influence the Federal Reserve. Doesn't mean they don't try. Once in a while, they try. They're not supposed to. And there's some rhetoric suggesting we change this, but that's incredibly unlikely. So it is very, very likely that interest rates continue to kind of be, run by the Federal Reserve and affected by the Federal Reserve, but not influenced by whether there's a Democratic or Republican president in office. Taxes is probably one of the biggest ones. It could be a big one, especially corporate tax rates, which are directly affected by the probability of companies and potentially their profitability of companies and potentially their share prices. The Tax Cuts and Jobs Act is sunsetting at the end of 2025. That was one that was passed when Donald Trump was initially in office in 2017, when it was basically had like some temporary tax cuts. Like, we are taking these tax brackets and we are reducing them by like 2% or 3% or wherever it was you kind of landed in those tax brackets. And at the end of 2025, beginning of 2026, they're supposed to go back to what they were before. So there will likely be some proposed legislation to extend those tax cuts or to amend them and change them, maybe decrease some brackets, increase other brackets. Like, we don't know exactly what that's going to look like. So that'll be kind of interesting to see. But that is, again, dependent on both Congress and the president. And it will need a lot of work from Congress to kind of figure out what that's going to look like. And neither candidate wants things to just like go back to what they were prior to 2017. So we'll kind of see what like the legislature comes up with ultimately. And this affects, you and me, individuals, as well as companies, not just the stock market.
But again, it's probably not going to affect you a ton. I mean, sure, your tax bracket might change by 2 or 3%, or your effective tax rate. There might be some adjustments here, but it's not going to change drastically. I think the biggest one that hit certain people, depending on what state they live in, was when the Tax Cuts and Jobs Act was implemented. They put a $10,000 cap on the state and local tax deduction. So for people that lived in high income tax states and owned an expensive mortgage and had high property taxes, I mean, they might have had 50, 60, 80,000 or more, 100,000 of itemized deductions that they could take. And a lot of those were cut down pretty significantly. So that definitely impacted some higher earners to some degree. But for the most part, and I think there's talk on both sides of expanding that SALT deduction, rather than capping it at 10,000, maybe expanding it higher, which would benefit literally
people
everyone.
who pay more taxes.
Yeah, exactly. doctors who live in higher income tax states and own houses and benefit you.
Yeah.
Um, but you could find one-off instances where certain tax changes impact more specifically a certain group of people. Um, but broadly speaking, it's probably not impacting you a ton, regardless of what happens. Again, Congress has to agree on stuff. Congress, also, the people who make up Congress pay taxes. They don't want to hurt themselves. So whatever is coming to fruition will likely be a more tame version of whatever is proposed, and it's probably not going to be too drastic because they all have to agree on it. And in order to
Hmm.
agree, they got to make some concessions. All right, we'll give you this thing if you give us that thing. So there's going to be some give and take, and it'll whatever happens, it'll probably not be too drastic. Um,
It'll be really interesting to see how that goes.
mhm,
I'm just curious to see how all that plays out. We shall
for sure.
see. Yeah. Tariffs are another thing that both candidates have talked about, potentially making it more expensive for foreign companies to sell goods and services here. And that could potentially affect, countries like China, who export a lot, and we import a lot of goods from China and from other places like that where manufacturing is fairly inexpensive. So the whole idea with that is that we make foreign goods more expensive so that goods that are produced in the United States by people working in the United States become more cost competitive, so that we're kind of supporting our own economy by doing that. And I don't know if we can necessarily say that that is a good or bad thing for the stock market as a whole. It could potentially negatively impact like foreign stocks and things like that, maybe buoy some domestic stocks. But like that's such a complicated thing that it's hard to tell like how that would affect the stock market.
But then, like we talked about, companies pivot. So, all right, we're putting a tariff
Yeah.
on a foreign-based company. All right, well, can a U.S. company move manufacturing overseas and for a lower cost and just bring those products? I think there might be some. It all depends. What are
How
the
they set it up.
what
Yep.
are the details of the rules and the laws? So again, companies will find a way to make money. If there's opportunities, new companies will pop up and fill a void. And it's definitely a fluid environment. But I think the foreign relations, the international stuff is probably where the president has the most influence and impact. Which again, depending on the what you're looking at, could or could not impact you or your investments at all. Again, the international investments would probably be the ones most likely to be impacted. Exchange rates also kind of play a role in that too. For example, let's say you're investment in European stocks, on a neutral basis is up 5%, but the euro is up 10% versus the dollar. All right, well, congrats. Your investment is up now 15% when you convert it back to dollars. And, vice versa. Let's say, European stocks in euros are up 15%, but, the euro fell 10% to the dollar. Now your investment return is actually only 5% when you convert it back. So and that stuff's totally out of your control. And I don't think the president or Congress has any influence on exchange rates. I mean, that's more of a, Fed and monetary policy, but also in conjunction with the foreign, uh,
The European
monetary.
Central Bank, which like
Yeah.
we have
So,
nothing to
like,
do with.
I mean, sure, we kind of have a say in half of the equation there, but, um, I don't think the European Central Bank is necessarily making decisions based on what's going to benefit Americans the most. No, they're worried about their own population. And sure, they might want to have some look at how this might impact, uh, exchange rates and converting to dollars and whatnot. But yeah, there's a lot to factor in that's totally out of our control and impossible to predict. So that's why we want to be diversified. We harp on it all the time, invest in a little bit of everything. That way you're always invested in whatever area is doing well. You're never overly exposed to whatever areas aren't doing well. And we don't need to hit home runs or get the best returns every year to reach our financial objectives. We just need okay returns consistently over time. And I guess consistently is probably not the right word because your investment returns will never be consistent. It's going to be a roller coaster ride. I was listening or reading something the other day where, again, 3 out of 4 years, US stocks are positive. But in the positive years, the average return was like 20 or 21%. And this is looking at the S&P 500, which is the 500 largest companies, which make up about 70% of the weighted value of the stock market. So a pretty good barometer. But I think, in positive years, the average return was like 21%. In negative years, I think it was negative 13%. So when things are up, they're up. When things are down, like it's rarely down 2, 3, 4%. It's also rarely up 2, 3, 4%. It's either double digits, either direction. And then again, take your averages 3 out of 4 years, positive double digits. So we take, 3 big steps forward, 1 decent step backwards, 3 big steps forward, 1 decent step backwards, 3 big steps forward. Repeat that over 50, 60 years. You're going to see some pretty good progress in your investments if you just leave them alone and stay invested.
Yeah. Yeah. I think the bottom line is that the election itself, like whether it's a Democrat or a Republican that's in office, has not a lot of statistical relevance, unlike the capital markets and the stock market in the medium to long term. Like it can affect things a little bit in the short term, but financial trends like inflation and unemployment and interest rates and all that kind of stuff like have a much larger impact. So, we think they have a lot of power, but they don't have that much power to affect economic cycles and to affect the stock market. So don't let it change how you're investing. You just invest in a way that makes sense for your long-term goals, and you do that. And you do that repeatedly, and you try not to change things too much in reaction to what's going on in the world.
We also don't want to try to time and predict things either. We might say, okay, forget the president. Let's just look at economic data and base our investment decisions on that. Well, usually when the news and the data is worst, that would be the optimal time to pour money in and invest. Like going back to early 2009, unemployment was horrible. The economy was in shambles. People were foreclosing on their homes. But starting in March of 2009, stock market pretty much took off like a rocket. We've had a couple hiccups along the way, but hasn't looked back since. I mean, we've pretty much been 15 years in growth mode at this point. There've been a few minor temporary recessions, but we haven't had anything serious for quite a while now. For many of you listeners, you haven't experienced, an extended downturn in your life, which is great. It'll come eventually, but yeah, even trying to time things based on data is usually not beneficial because it often zigs when you think it's going to zag, and they're really hard to
That is
predict
hard
that
to
future.
interpret. Yeah, absolutely. Well, thank you for listening, everyone.
Go out and vote November, whatever. Or if you're
Yeah.
mail-in ballots, just mail them in before the deadline, whatever that deadline is, first Tuesday in November. So, all right. Thanks for listening. We'll see you next time.